Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. I hope everybody had a great weekend. Stock market's back open today. What's going on? Well, we were started off down and pulled it right back up. Dow's up about 100 right now. Nasdaq's up about 50. Over the weekend, I was reading some very interesting articles. A lot of people think that we're in a new bull market. A lot of people have the fear of missing out, and they're jumping back into this market. They don't want to miss out on this bull run. Now, I have a completely different take than that. I do believe this is a short covering rally, a bear market rally, if you will. But those rallies can be very strong, and this has been very powerful. And we shot right back up to where the S&P is right at the 200-day moving average. There's a big tug of war going on here. It's a war between the bulls and the bears. Now, we'll see how this plays out, but there's a lot of bearish signals out there. Okay, so that's S&P has been up the last 4 weeks in a row. 4 weeks up, 4 weeks up. Every week it goes up higher. And there's nothing unusual about that, 4 weeks up. But here's what is unusual. The VIX has been down every week for the last 8 weeks. That is very rare, very unusual. That would be a sign that we're soon going to reverse course in this marketplace. Now, that's just one of the bearish signals. The other bearish signal is that there are options on the VIX. These options are very lopsided to the fact that the calls, they're paying 5, 6, 7 times more than they are for the puts at the same strike price. This is a very bearish sign for the market. But we'll see what happens. That means that the volatility is going to go up and the market's going to come back in, but it keeps pushing higher, keeps pushing higher. It is ignoring all these bearish signals. We'll see how it plays out. The last week we had these what are called exhaustion gaps, right? We gapped up when we came out with the inflation number, okay, the CPI. Then we gapped up again with the PPI. And these are exhaustion gaps. Last week, the market went up, yes, very true, but on very light volume. That is the tail end of a big rally up. Now, will the bears come back in this week? That I don't know. We'll see how that plays out. But I do think the bears are lurking, and I do think that they're going to win this tug of war at the 200-day moving average. We'll see how that plays out. Let's move over to the real estate market. Now, this is fascinating to me. You know, I didn't realize that I really live in the epicenter of this housing crash that's coming. Now, San Jose is the market that is down the most of any major city out there. San Jose, California is already down about 10% already. And houses in San Jose are pricey. They're about $1.5 million. So basically $150,000 worth of equity has already been wiped out from these homes of people that just recently bought them. So we're at kind of this epicenter, right? Now, here's the thing. Inventory, it's been surging up all across the nation. More houses have been coming onto the market, okay? So more and more houses have been coming on the market. In San Jose, California, yes, inventory is going up, but we're not even back to the levels of where the pandemic started yet. So inventory isn't back to that level. Why are the prices already dropping 10%? Already down 150,000? Well, this is interesting. A lot of people don't talk about this, but the housing market was already starting to roll over right before the pandemic started. It was starting to slow down. It's like a roller coaster. It goes like this and then it kind of flattens out, and then it was starting to slow down right before the pandemic started. Well, then what happened? Well, we hit that pandemic, right? Okay, so why did the market continue higher? Why did the house prices take off during the pandemic? Well, they printed 40% of the money supply. They added trillions and trillions and trillions of dollars. This money has to go somewhere. Where did it go? Well, of course, it went into the stock market and it went into the housing market. Now, you see, I think that the 2008 housing market crash was never played out. It never played out because they reinflated the bubble, and that was their goal. They announced that they're going to reinflate the bubble in 2009 with the printing of $4 trillion. They printed $4 trillion that year just to reinflate the housing bubble. And they were successful, right? They've had a good 12-year run now. Nothing but straight up for the housing market. But now they're having trouble reinflating the market. Yeah, got that $1 trillion anti-inflation bill. Okay, we'll see how how that plays out. They're still pumping money in. They're still buying mortgage-backed securities. They say they're not, but I know they are. But they're still doing these things to try to keep the housing market up. You see, the housing market is 60% of the wealth in the world. So real estate is, and it's 30% of the GDP. They do not want the housing market to come down. They can't let it fall. They got to keep it propped up. But like I say, it's like a roller coaster ride, and we've reached the top. We've reached the top. We've reached the top in June. And this is just not in my area. This is all across the nation. All across the nation, we're down about 5% from the June peak. Now, you'll get these headlines that come out and say, year over year, house prices are up. And they are up year over year. But we hit that peak in June, and now we're down about 5%. Well, that's not in your area, but overall average for the nation is down about 5%. And in my area, San Jose, California, we're leading the way down for major cities, and we're down about 10% here. So we've reached the top of where the roller coaster is, and now it's starting to come down, and it can come down really quick. You've been on a roller coaster before. You know how it kind of chugs and chugs and chugs going up, but then when it comes down, man, that drop can be quick. It can happen fast. Okay, a lot of people don't believe that. Now, new home prices, well, they peaked out in April. Their roller coaster went up in April. They're already down 13% on new home sales. New home sales are already down 13%. Okay, so how is this going to play out? Well, the way I see it is that you have this wealth effect. You have this wealth effect in houses, well, in the stock market too. When things are going up, people feel rich, right? They feel rich. They have more equity in their house. They think that they have more money. They go out and they spend more money. But this is when prices are going up. When they realize that prices are starting to go down. See, a lot of people don't follow this like you do, like I do. A lot of people think that house prices are still going up. They don't see this downward. We're on the downward decline right now. They don't see that yet. And this, where they say we're down 5% overall in the nation, but this is just getting started. They don't have the numbers out for August. This goes back to July numbers. August is still, we're in the middle of August, and it is dropping pretty quick. Inventory keeps flooding the market. So this wealth effect, when people realize that they don't have all the money they thought they had, they start to feel poor as their house goes down. They're going to start to feel poor as the stock market goes down. It's the wealth effect. It's the reverse wealth effect. They actually start to feel poor. Now, what do people do when they feel poor? Well, let me think. They spend less money. They don't spend as much. Well, what happens when people don't go out and spend money? Look, we're a consumer-driven economy. We're going to go into that recession. Right now, we're in the recession now, but you can't say that because it's politically incorrect. It offends the people in the White House right now. If you say we're in a recession, which just cracks me up, that's okay. But okay, so when you get into this recession, because the wealth effect, people don't spend as much money, puts us into this recession. What happens in the recession? Well, job losses. People start to lose their jobs because that's what happens in a recession. People spend less money. People lose their jobs. People don't feel rich. It's kind of like this spiral now, right? So houses are going to continue to go down. People lose their jobs. They get foreclosed upon because they can't pay their mortgage. That house gets put onto the market. More inventory starts spiking up. Those foreclosures are coming. I'm telling you, they're on their way. You don't have to believe me. And I know not in your area. Everybody's got a job in your area. But no, this is across the nation overall. Look at already down 5%. You can't argue with that. Inventory surging. You can't argue with that. These are just facts. These are what's happening. This is just not my opinion. Now, I do have an opinion. My opinion is that we're going to continue to decline. We're going to continue to drop. And we're going to drop at a faster rate than we've been dropping right now. But we are dropping. People are feeling poor because their house equity is going down. People want to get out of their house. They want to sell now. They search Google. They go online. They search, how can I sell my house fast? That search has been searched so many times. Now, of course, we got the other side of the equation where the government doesn't want the houses to drop. They don't want the houses to drop. That's going to be bad for the upcoming election. People don't want that to, your house drops. You might not vote for the people that are in office right now. So they want to keep them priced up. So what are they doing? They're spending trillions of dollars. Same old game. That's all they can do. Now, do they have the money? No, they don't have the money. Look, we printed 40% of all the money in existence has been printed in the last 2 years. That's amazing to me. Look at this debt market. It's going to blow up. It's going to explode. And when that happens, then the game's really over. Let's hope that's down the road a ways still. Right now, we're just getting a little decline. When that debt market explodes, oh man, you don't want to know about that. Believe me. But it's... Just give you a little hint. 80% in the stock market's going to be nothing on the downside. 50% in the housing market. Oh, you pray your house only drops 50%. When that debt bubble explodes, it's just going to get ugly. And I don't want to be all negative at this is just Monday. It's the start of the weekend. We got an exciting week ahead. I mean, there's a lot of stuff going on this week. We'll see how the market plays out. Stock market, maybe the bears come back. Housing market, I think it's going to continue to drop. I really do. That's just my opinion. You can have your opinion. Maybe you think prices will double from here. Maybe they will. We'll see how it plays out. You like this stuff? Give me a thumbs up. I'm Tall Mike. Get out there. Have a great Monday, everybody. We'll talk again real soon. Bye-bye now.